Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and I'm here with this week's Stock Power podcast. This week's Power Stock is a key player in the U.S. natural gas and oil market. It scores a 96 on our Stock Power rating system. But before that, I want to let you know that if you do have a question about a particular stock or maybe the broader market or the economy that you'd like to ask either myself, Adam, or Charles, email us at feedback@moneyandmarkets.com. We're going to put that email address right down below. And if we use your question in an upcoming video, any of our upcoming videos, we're going to hook you up with some very cool Money and Markets gear. We've got t-shirts like the one I'm wearing right here. We've also got sweatshirts, we've got hats, we've got other stuff as well. Again, just send that question into feedback@moneyandmarkets.com. Also, make sure you head over to moneyandmarkets.com. It is your home for safe, sound, smart, simple, adaptable investment information. On the site, you can check out our Stock Power rating system. It rates thousands of stocks based on those 6 fundamental and technical metrics. You can create your own watch list. You can track your stock performance. You can get our in-depth analysis. And you can get all that for free at moneyandmarkets.com. Now let's get right to it. It is hot outside. I'm looking outside right now. It's about 93 degrees here in South Florida, which doesn't necessarily sound that bad in comparison to other parts of the country, but it's a sticky heat here in South Florida. And I'm from Kansas. I'm used to more of a drier heat, but one that's like about 100 and some degrees. Regardless, it's hot. Last week, 90 million Americans were under heat warnings or advisories, and that was on Sunday alone. Europe recently experienced a record heat wave across the continent, and things aren't really getting any cooler as we're approaching August. And these extreme conditions are putting pressure on natural gas. Natural gas is a key element used to create electricity. That electricity is used to power air conditioners that we have cranked down into the 60s right now because it is so hot outside. Oil and natural gas companies make money when the price of their commodity they're looking at, whether it be oil or natural gas or both, goes up. So you have increased demand for natural gas due to the summer heat. Then you have higher prices, and that means greater profits for these oil and natural gas companies. Now, in today's podcast, I'm going to share a company that develops, explores, and produces natural gas and natural gas liquids here in the U.S. It earns a strong bullish 96 on our Stock Power rating system. It's on track to break its annual revenue record this year, and its trailing 12-month profit margin is, get this, a whopping 82%. That is its profit margin for the last 12 months. Now, again, we talked about Europe. They're in the midst of an energy crisis. Sanctions are strangling the natural gas supply from Russia. Basically, the pipeline is kind of open a little bit, but not very much. You've got this political tug of war between the European Union and Russia, and it's causing all sorts of issues with not only a hot summer, but also a projected very cold winter coming up. Now, here in the U.S., we have extreme summer heat across the South, into the Midwest, the Southwest, and on the coast, basically everywhere. Just about everywhere it's hot. And it's forcing us to crank up those air conditioners. We're setting the thermostats down into the 60s just because it is so hot outside. And even as natural gas prices rise, we're still doing it because it's just something we're trying to stay cool. Now, the chart I'm showing you here shows the jump in the price of natural gas in the U.S. It's a 54.6% increase just in July. And that's not even the top. We hit the top in June. Then we saw a drop off, and now we're on our way back up again and could reach a top here in the coming weeks. High natural gas prices, increased demand spell big profits for natural gas companies. Now, what I'm going to tell you about in this episode of the Stock Power Podcast is a strong bullish stock, earns a 96 overall. We expect it to beat the market by at least 3 times over the next 12 months. And that stock is Coterra Energy Incorporated. It trades on the New York Stock Exchange. The ticker symbol is CTR. The company develops, explores, and produces oil and natural gas. It's got reserves, and it's got locations in Pennsylvania, Texas, Oklahoma. It also has other reserves even in Kansas. But it's basically found the largest shale areas, and it has its fingers in those shales. So it's producing, it has the ability to produce a lot of natural gas. It scores a 96 on our proprietary Stock Power rating system, which means we're strong bullish, and we expect it to beat the broader market by at least 3 times over the next 12 months. Now, particularly, it scores a 97 on our momentum factor, but I'm going to get into that in just a bit. CTRA is a very strong fundamental stock, and in these uncertain times, that's actually pretty good. It scores in the green in all 3 of our fundamental metrics: value, quality, and growth. It's got a 1-year annual earnings per share growth rate of 357.7%. And so it's making a profit, and it's making a lot of it. Its trailing 12-month sales growth, 228.8%, and it earns a 96 on our growth metric. But not only that, it is a quality stock as well. It's very solid on quality with a gross margin of 76.3%, Of course, over the trailing 12 months, it's actually even higher than that. And now the fossil fuel exploration industry has an average of about 65%, which puts CTRA as a 91 on our quality metric. Now, it's also a good value stock as well, which is important. It's got a price to book value ratio now of 2 and a price to sales ratio of 4.8. Those are right in line, if not slightly higher than the peer average, but not necessarily anything to be concerned about. Now, let's look at that stock momentum that we like to see. We like to see maximum momentum, which means we like to see stocks are in a confirmed uptrend over a good period of time to confirm that that momentum is legitimate. Now, CTRA hit a 52-week low in August of 2022, or of 2021 rather, and it climbed 122.7% since then after reaching that low. It's now just 24% away from its 52-week high that it picked up last month. Over the last 12 months, Coterra is gone up about 102.5%. Industry peers are only averaging gains of about 79% over the same time. But I'm really excited about these revenue numbers for Coterra. Take a look at this chart here. This is pretty impressive. In 2020, CTRA reported annual revenue of $1.4 billion. Not bad, right? Well, last year, the company increased its annual revenue up 164.3%. To almost $3.7 billion. Now, look at the annual revenue projection for just this year. $8.6 billion on the back of increasing natural gas and oil prices, as well as massive demand for both. That's a 132.4% jump just from last year, and it's a record in annual revenue for the company. So it gives Coterra a gross profit margin of a massive 80.7% for this year when it's all said and done. For the last 12 months, again, that gross margin has been an outstanding 82%. On top of all that, CTRA has a forward dividend yield of 2.04%, which pays its shareholders an annual dividend of about 60 cents per share per year. So now you're looking at a company that has strong growth potential, is on a confirmed momentum uptrend, and pays a dividend on top of all of that. So this company has a lot of potential here, especially as we see some unnerving in the natural gas market. We're hot in the summer, but it's projected to be cold in the winter. So we could see natural gas prices stay at that level. They may tick down a little bit, but I don't think it's going to really cut into the profit margin for a company like Coterra. Now, let's look back at our YouTube poll question from last week. Inflation remains high, not just in the U.S., but all over the world. And we asked viewers what the first thing was you would give up to stretch your dollars during inflation. Maybe some of you already have. Now, more than half who participated in the poll said they're going to give up eating out at restaurants. That's justifiable. We try to cook here at home a little bit more too as well. 17% of those who voted said that you would cut your cable or streaming service. 12% said that you would reduce charity donations, and another 12% said you would cut that gym membership right out the door. And finally, 8% said you would stop going to the salon as much in order to save money. Thanks to everyone who took part in our poll. Hopefully it doesn't come to the fact to where you have to cut all of them, maybe one or two. Inflation is still on very shaky ground right now, 9.1% last month. We're going to see what it is in the coming weeks here for this month. So remember, you can vote in our weekly poll on our YouTube page. Just go to youtube.com, search Money and Markets. We have the green bull and bear logo. You'll find our polls under the community tab. Just go there and vote. We usually put those polls up right at the very end of the week, so you have plenty of time to soak in and give us your thoughts on whatever we're asking about this week. Now, if you have a particular question about a stock or the broader market or maybe the economy, and you'd like Adam, Charles, or myself to answer it in any of our upcoming videos, email us. The email address is feedback@moneyandmarkets.com. We'll flash that right down below there. If you send us a question and we use it in an upcoming video, we're going to send you some very cool Money and Markets gear, all for free, just for the effort. We've got hats, we've got t-shirts like this one right here, we've got sweatshirts, although probably don't need one of those right now, but you might need it in the winter, especially if you want to cut that natural gas cost down a little bit, cut that electricity bill down a little bit. You know, that sweatshirt might come in handy. Also, head over to moneyandmarkets.com, sign up for our free daily e-letter. We give you safe, sound, smart, simple, adaptable, profitable investment information. Our goal is to find profits for you in any market condition, bull, bear, neutral, doesn't matter. Our team works very hard to find those opportunities for you everywhere we possibly can. And also check out my Stock Power Daily. 5 days a week, I send you one highly rated stock stock is going to beat the market by 3 times over the next 12 months. And while you're at moneymarkets.com, check out that proprietary stock power rating system. Powers a lot of what I do and is a very handy tool to use. You can use our metrics, get ratings of thousands of stocks out there. Go to the website, type in your stock ticker or your name right in the upper right-hand corner of the homepage, and you will be able to see that. You can put a stock on your watch list. You can track stock performance. You can read all of our in-depth analysis of that stock of those stocks, all for free at moneyandmarkets.com. Until next time, this is Money Markets research analyst and host of the Stock Power Podcast, Matt Clark, wishing you all, first off, stay cool and safe trading.